Hi y'all, welcome to your July market snapshot. I'm Jen and we're going to talk today to Ruben about all things market. Don't forget to subscribe because if you missed us last month or you want to catch us next month, you'll want to hit that button. So Ruben, there's a lot going on in the market right now. What are some of the things that we should talk about today?
Yeah, so we're going to hit three main things, right? We're going to talk about National Association of Realtors report on June home sales. We're going to talk about mortgage rate trends, and we're going to talk a little bit about kind of like what conversations we can be having around financing.
Let's start talking about what's the National Association saying right now about what's going on with us.
Yeah, so the National Association of Realtors report came out this month. Starting with sales, we're seeing those are down about 19% compared to last year. Compared to the previous month, they're also down about 3.3%, right? So not only have we seen a year-over-year decline, but we actually saw a dip between May and June. That being driven mostly by an upward trend in mortgage rates.
Yeah, those pesky mortgage rates, right? Well, not only sales, but we've got some inventory challenges and pricing challenges as well. So let's start with pricing. What does that look like in today's market?
Yeah, so in terms of prices, we saw prices are down about 1% from the same month last year. Compared to last month, they're up 3.5%, which is a normal seasonal pattern. We see prices usually peak in June. So the good news is we're back on a normal seasonal trend for prices versus last year. What we actually saw was sort of a general downward trend for a lot of the year.
So that's good news for sellers thinking about selling, maybe not great news for buyers who are thinking about buying, and yet it seems like that's giving us some indication that we're in a healthy, strong market. We also have inventory to deal with, and there's some really interesting things going on there. What's happening with our inventory right now?
Yeah, so that's one of the sort of odder trends we have right now, right? We're in a situation where we're seeing nationally year-over-year declines in prices, but we're actually seeing year-over-year declines in the number of houses for sale as well, right? Wow. Inventory was down about 14% year-over-year in June, and there were roughly 1.08 million homes for sale, which is about even with what May was.
Okay, so we have tighter inventory. Prices are still steadily coming back to where they peaked last year, is what it sounds like. And yet overall, the number of sales is down. Did I catch all that right?
That's correct.
So it's a tale of almost two markets again. It's an interesting study in how these things are affecting our folks. And one of the things I keep hearing about why our inventory is so tight is this terminology about golden handcuffs, and sellers aren't leaving their current mortgages because they're golden handcuffed to them. Let's talk about mortgages and what that really means.
Right, so when we hear in the media people talking about golden handcuffs, what they're talking about, we also call it a mortgage rate lock-in effect. And that just basically points to the fact that over the last 3 years, at least in the lead up to this year, we saw a lot of refinancing and purchasing happening at very low mortgage rates. So that means there's a big chunk of people who are sitting on what we call below market interest rates. They may have a mortgage at 2.9 or 3.3%, and the prevailing rate right now is closer to 7%. So
it's a big difference.
That's right. And like making a transition with that kind of rate to that 7% rate, that's a little bit jarring, I think, at first for people to even contemplate.
Sure. So what's going to be different though? I mean, I keep seeing mortgage rates going up. I know you said that they've come back down a little bit from their peak, and yet what's really going on with them? When are we going to see any changes, if at all? Right,
so that brings us to that second conversation, right? What's happening with the trend in mortgage rates? We believe they peaked probably this last month. Luckily, inflation reports were very positive over the last couple of months. That's great news for mortgage rates because it means that inflation should be slowing down. That means less rate hikes from the Fed. And it potentially means that Treasury rates should hopefully stabilize as well. But that being said, we don't expect rates to trend down dramatically. We're talking, hopefully we'll be moving back into the low sixes, upper fives, but we're talking months to get there, not days, not weeks. We could be hovering in the upper sixes for quite some time, just depending on how the economy evolves.
Gotcha. So what I'm hearing, even as sad as it may make some of our viewers, is that mortgage rates are kind of where they are right now to stay. They may go a little down, they may pop a little back up, but as we showed in our last market snapshot, the trend on average over time is really in those high fives, low sixes over the last 20, 30 years. So What I'm also hearing you say is don't expect that to be any different now and don't expect it to change quickly.
Yeah, that's right. Elevated mortgage rates are probably here to stay for some time. The situations that would get us back down into these historically low rates are not good ones for the economy, right? It would be unlikely we'd be moving back to 3% mortgage rates in a situation where unemployment remains where it is, right?
Yeah.
Where GDP remains where it is. That's worst case scenarios, very likely, at least in it happening in any kind of fast way.
So we've talked a little bit about the rates themselves. There's a lot of interesting options that are available right now to our buyers and our sellers to think about when it comes to mortgages, because we're not going to see any real end in sight in these sixes, it sounds like. So let's talk a little about what does that look like? What's the difference in just going for a straight conventional loan and bringing in some optionality and maybe buying points or other things?
Yeah, so I think one thing that we can kind of bring forward really in away from the past is the idea that, the seller doesn't have to be passive in the financing conversation, right? I think one example here that we'll throw up, and that's essentially looking into, what happens in terms of a price reduction versus simply offering to buy points down on someone's mortgages to get their payment down.
You can see from the graphic that there is a way to actually get the seller to net more money, which is their goal, while also allowing the buyer to pay the lowest mortgage payment possible for themselves based on dollars and stay in that range that they were shooting for at the same time, versus taking a big price cut on the seller side just to get the buyer down to a rate or a monthly payment that they're really comfortable with.
Yeah, that's exactly right. And in this example, we looked at, our theoretical was a $500,000 house, the 20% down payment. What does it look like for a price reduction versus simply buying down 4 points? And you can see from the graphic that the seller does net better buying it down, and the buyer can basically have the exact same payment in either of those scenarios.
So the key for our realtors to take away is they should understand these options. We have mortgage hacks classes going on at a lot of our KW offices across the country so that we can learn more about what those options are and how we can create that win-win, not only for the buyer and the seller in that one transaction, but for those folks who feel handcuffed to their current mortgage payment. What would it look like if they sold? How do they monitor that transaction with the buyer, as well as when they are the buyer? What are their options so that they don't feel so tied or tightly tied to the current mortgage rate that they have?
Yeah, that's exactly right. And I think it's just a good time for everyone to educate themselves on what's out there, what can be offered, explore the mortgage world a little bit more now that we're seeing people having to get a little bit more flexible in terms of how financing is happening.
Absolutely. And we should really be taking some cues. We talked about builders last time in our June market snapshot. So when we look at what builders are doing, they're doing a lot of this. They're getting into the weeds with what kind of options can I offer. They're offering multiple different options to buyers, which is helping compel buyers to want to purchase their new construction versus resale. So I would ask for all of our folks watching that they make sure they pay attention to that and go take a class and go look at what the builders are doing, such that we can help our sellers sell as well as our buyers get what they're looking for.
Absolutely.
Awesome. Thanks, Ruben. And don't forget to hit subscribe, because you're not going to want to miss what we talk about next month. And if we didn't talk about something you wanted to hear, please send us a comment. We'd love to know what you'd like to hear about so that we can help you and your buyers and sellers learn more about what's going on in our market right now.